anything left unsaid, anything that we need to give extra emphasis to, do you think, when it comes to President Trump's criticism of Chair Powell and how this still sits in the market? I was wondering whether we get any clues from what happens at the short end of the US Treasury curve as to how much Fed independence there is. I suppose how much the 2-year moves on criticism from the White House.
I think that's a great way to look at it in terms of, like, we did see the 2-year come lower but didn't completely collapse, which shows that there's some kind of belief that the Fed will push back. We talked about this earlier, but it's important to re-emphasise. We knew that it would lead to dollar weakness. We knew that it would lead to a steepening of the curve. It would be worried about long-end bonds. What I was surprised about is the panic in the stocks reaction. And I think that's the thing, that going back to what Lizzy said earlier, that might kind of say to Trump, like, this is a bad idea. But as I also discussed in the show with Melanie Baker, our guest earlier, I'm a little bit worried that we've lost Fed independence in the next 4 years. Saying lost Fed independence is too strong a phrase. I think its credibility is now going to be undermined to the extent, because every single decision will be questioned. Were they been going too easy because some governors were fearing criticism and pressure, which means the backdrop here is that the US, the next few years, is going to have easier monetary policy than it probably should be, or at least that's going to be the perception. That's going to continue to weigh in the dollar, which I believe in anyway for the next few years. We're going to have dollar weakness, and that's going to probably be lower front-end yields, but problem for longer-term yields, and that's a really big issue at the moment.
Mark, you talked about Taco in the context of the Fed and Trump maybe chickening out on whether he fires Powell. Where are you thinking about it in terms of the tariff story? Because, we're coming up to that August 1st deadline. The NASDAQ just hit another record. It seems like at least the market thinks that Trump will chicken out when it comes to trade. Do you still believe that?
Absolutely not. I mean, I think the acronym is hilarious, but I don't think it's valid at all. I do think that he is worried about what's happened to markets, but I don't think on the short-term moves so much. And I think, one of the most consistent things that Trump has always said is he loves Trumps as a policy tool. He thinks they're important as a geopolitical policy tool and for revenues. He really, really goes on about that. And that this was long before he became president this time. He talked about it a lot in between his two administrations. And so there'll definitely be tariffs. It's just about what level and in which countries. But it looks like we're heading to a world. So it's 8.5%, 8.8%, I think, in May. I think we're heading to a world where the average effective tariff rate in the US is going to be 10 to 15% versus, around 2% for the last 25 years average, 2.3%, I think is the last 25-year average. So that's going to be seriously damaging for US business. And I think markets have not fully priced that, and I think there's going to be problematic. So I'm having been positive to stocks the last couple of weeks, thinking the fiscal tailwind would help us rally through the July 9th deadline. I've now quite bearish for the next month and quite worried how the deadline plays out.
And quite worried how high long-end yields might go then.
Yeah, it's a double tangent. So we've got the trade and we've got the long-end yield situation. And the long-end yield situation continues to get worse, and it's not helped by those incremental stories on Powell at the moment. And the problem for long-end yields is it's global. And we've got many catalysts coming up. We've not just got trade, but for example, this weekend we've got the upper house election in Japan, and JGBs are playing a large part of this. We know the UK has got its own issues as it kind of heads to stagflationary dynamics. So it's a global issue in yields, and this is negative for stocks.